Hello everyone, in this tutorial I'm going to show you how to sell a cash covered put. Sometimes you might hear writing a cash secured short put. They're basically the same thing. I'm not a financial advisor, so invest at your own risk. So why would you want to sell a cash covered put? Well, this is a good way to collect some premiums while the stock stays relatively flat or if it goes up in the future. I think showing an example of how this works will help you understand it better, so let's get to it. I'm going to use AMC as an example. So I'm going to click on Trade AMC Options. I'm going to click on Sell and then Put. Once I've done that, I'm good to go. I want to make sure to click on a strike price that's below the stock's current price. And I can also select the expiration date. So I'm going to select maybe June 18th as expiration for the option. And then as you can see, the premium of the option goes down as the strike price goes down. The premium is basically a credit that you receive. So in this case, the $33 strike price, if I sell the put at, I get $280 because it's $2.80 times 100 shares. So $280 credit. So I'm going to select a smaller strike price. I mean, the $27 strike price is pretty good with a June 18th expiration date. So I'm basically betting that the stock won't fall to $27 by the June 18th expiration date, and also receive a credit of $100 something. And the worst case scenario is that if it does fall to $27 or below, I am forced to purchase 100 shares of AMC at $27 each, regardless if the price were to go even lower. But I still get to keep the $100 something credit even if that does execute. So when selling puts on a stock, make sure you pick a stock you're willing to hold 100 shares of in case that happens. So I'm just going to press on this one. So saying I'm selling a put with a June 18th expiration date, and I get $119 credit. So down here it shows you your collateral. That's how much you have to have in order to sell this put. And that's my max profit here, which is $100 something. So I'm gonna click on continue, and I think good for a day is fine. Just one contract, and usually I want to enter a limit price in between these two prices right here, and for a higher chance of executing. So let me just put $1.17. Seems good. And I'm gonna review my order, saying I'm agreeing to buy 100 shares of AMC at $27 each before the June 18th expiration date. But if I'm not asked to buy it, I get to keep the full amount, and my collateral goes back to my account. So I'm just going to submit this order and then click done. Now I'm going to wait for my order to execute. So as you can see, my AMC $27 put sale executed. So now all I have to do is just wait for the option to decay over time. So as long as it expires out of the money by expiration date, I get to keep the full $100 something amount. But I can always close my position early, but I had to pay back some premiums. I would do this if I want to like minimize my risk of the being forced to buy 100 shares, or if I'm satisfied with the profit that I already earned. So I could just close my position by paying back a little bit of the premium that I earned and then keeping the difference. As you see down there, I was credited $117. And this will also show up in your history in case you want to verify it. So let me show you how to close your position. You have to basically buy back the option that you sold. So I sold this option not so long ago, so I got credited $23, and its current price right now, it's like $13, so the difference would be $10. But now it's 11. So basically if I want to close it, I just have to buy it back by paying back a premium of $12, which subtract that by 23, which is the initial credit, and I get just keep the $11 credit. And I just review order. So I'm basically have my collateral released of $2,500, and I'm just paying $12 to close the position. I'm going to submit the order. Click on done. And I'm just going to wait for my option to execute. So as you can see, the AMC $25 sell put is gone. I've already closed my position and received the credit. And my buying power has been increased from the collateral being released back to it. So that is all for this tutorial. Thank you for watching.